Forget stocks, forget gold, forget cryptocurrency. The world's best performing financial asset is not traded on Wall Street. It's carried on the arm. This is the Hermès Birkin bag. And for decades, it has defied every law of fashion economics,
appreciating in value year after year.
Forget stocks.
We're going to show you the shocking data. The Birkin is a demonstrably superior investment. Over a 35-year period, it delivered an average annualized return of 14.2%.
Not only did it beat the S&P 500, but it achieved those returns with lower volatility.
While stocks rise and crash on global uncertainty, the Birkin's value has a stable, almost mandated, upward slope.
How did a simple leather handbag become a financial instrument, protected from economic shocks? The answer lies in a strategy of controlled supply, psychological desire, and a chance meeting on a plane. How did a simple leather handbag become a financial instrument, protected from economic shocks? The answer lies in a strategy of controlled supply, psychological desire, and a chance meeting on a plane. The story begins in 1984, high above the English Channel. Our main character, British actress, was famously known for
carrying a large, messy, woven basket instead of a traditional purse.
But 2 days before this fateful flight, her partner reportedly drove his car over her basket, deliberately crushing it.
Seated next to her was a man who watched as the contents of her inadequate bag spilled onto the floor. Jane complained, half-jokingly, about the impossibility of finding a chic, functional bag spacious enough for a young mother.
That man simply replied, "But I am from a renowned luxury brand." He was the company's chief executive. On an airline sickness bag, they sketched the first prototype of the iconic handbag. This accidental origin story feeds the mystique. But the value is rooted in absolute mastery.
Every Birkin is handcrafted by a single artisan in France. This process is not mass production. It requires an estimated 18 to 20 hours of focused labor. Every Birkin is This commitment to quality isn't just tradition, it's a financial guarantee. It ensures the physical asset has
an intrinsic quality that defends its resale value against depreciation.
The key to the Birkin's investment profile is Hermès's brilliant, almost ruthless strategy of engineered scarcity.
This is the Veblen effect in action. The demand for the good increases precisely because the price and difficulty of access are high.
You cannot simply walk into an Hermès boutique and buy a Birkin. The supply is tightly controlled by what are known as quota bags. A client is typically restricted to purchasing a maximum of 2 of these bags per calendar year.
And that's if you're lucky. Access is often dictated by an unofficial pre-spend requirement. This means
customers must first spend a significant, unstated amount on other Hermès merchandise, scarves, jewelry, shoes, just to qualify for the chance to buy the investment-grade asset.
Economically, this pre-spend acts as a non-refundable entry fee, or what some call a tax on aspiration. Economically, this intentional gatekeeping ensures the asset is reserved for an elite few.
But the ultimate financial engine is the least glamorous part of the strategy, the price tag itself.
Unlike most brands, Hermès consistently and quietly implements annual retail price increases.
Between 2020 and 2025 alone, the price of classic models rose by an average of 5 to 10% annually.
But this isn't just corporate policy, it's financial engineering. This ongoing adjustment acts as an institutionalized price floor. Because the cost of buying a new bag is always rising, the value of your existing bag in the secondary market is automatically boosted. It's a guaranteed inflation hedge, structurally designed by the issuer to transfer wealth to the owner. This is the mechanism that generates that consistent 14.2% return.
The consistent returns are impressive, but the real money is made in the rarefied tier, the secondary market for exotic leathers and diamonds.
Auction houses like Sotheby's and Christie's turn a handbag into a certified financial asset. Here, we see the outliers that drive the market's high watermarks. Exotic versions, crocodile and alligator, often sell for 2.5 times their original boutique cost. The most coveted model? The legendary Diamond Himalaya Birkin, which can trade for well over $50,000 on the secondary market. These pieces operate like fine art, where rarity creates exponential premiums. On the secondary.
The final proof of the Birkin's investment status came in 2025, when the most valuable handbag in the world was sold. It was Jane Birkin's original Birkin, the prototype delivered to her in 1984.
That piece of history and fashion art, sold at Sotheby's Paris, fetched an unprecedented $10.1 million USD. That sale solidified the Birkin's position alongside rare art and high-end real estate. But before you liquidate your 401k for a crocodile bag, you need to understand the serious risks of this specialized investment. The 14.2% return is the gross figure. The net return is severely challenged by transaction costs that crush typical stock market fees. The lack of liquidity means you can't sell instantly. And to ensure authenticity, which is essential, you must use auction houses or high-trust consignment services. These firms demand commissions ranging from 15% to as high as 40% of the final sale price.
The second and most critical risk is the ever-present threat of counterfeits. The quality of fake Birkin bags is rising.
Fraudulent sellers use sophisticated tactics online, often using professional images of real bags to sell fakes.
Due diligence requires specialized knowledge. A single mistake can mean total capital loss.
Finally, the asset is susceptible to shifts in cultural preference and celebrity whims. If a color or a size suddenly falls out of favor, demand drops.
And so does the resale value. The Birkin is a single, concentrated asset, unlike a diversified index fund. And so does the Hermès Birkin is a powerful economic anomaly. It's a masterpiece of economic engineering, proving that
a meticulously managed supply can crush the returns of conventional market forces.
The data is clear. The Birkin has historically beaten the S&P 500 and gold, but it only serves as a superior investment for the rarefied collector who can successfully navigate the brand's gatekeeping and the secondary market's crippling fees. This handbag is not a safe haven for your average retirement savings. It is a trophy, a status symbol, and an enduring testament to the power of scarcity. What other luxury item has secretly been outperforming your portfolio? Let us know in the comments below.